What's going on, Bigger Pockets family? Thank you for watching this program. My name is Matt Faircloth, and I am so honored to be here with you guys today. Not just because I'm honored to be here with you guys every Monday, but I'm honored even more special today because we've got a really cool conversation. Hello, Ariel. Hello, Patrick. Good afternoon, and hi, Andrew, too. I want to just tell you guys how excited I am for today's conversation because a lot of people that are watching have full-time day jobs but want to be successful in real estate investing. So I want to tell you guys, it is possible to do it. And we're going to talk today is going to be all about investing while you get a full-time job. Hi-Fi, how are you? Nice to see you. Lots of folks coming in on YouTube. We got Facebook. I got Katie. By the way, give me a quick shout out, man. Tell me where you guys are from. Type in like, hi, I'm Katie from Oklahoma, or I'm Fi from wherever, whatever. Type in your location and I'll give you guys a quick shout out as we got them coming in. So type in your locations. If you guys can, do me a favor, right? If you guys can, the way social media works is the more people that give things likes, give it a thumbs up. So go ahead and click the thumbs up button right now. Give me a heart, give me a thumbs up, whatever you got, because it tells Facebook, it tells YouTube, hey, Facebook, hey, YouTube, I like that. And you should show that to more people because I like it. Maybe they'll like it too. And that's what's going to happen. So please take a minute right now and hit the like button that you got, hit the thumbs up button, and send some love over here to BiggerPockets.com for all the cool stuff that we're doing for you guys every week, including this program on Mondays. Lots of shout outs. I got Princess from Georgia. Welcome. I got Jarvis coming in from Macon, Georgia. I got Winnette from Greensboro. I'm flying on a plane to Greensboro this afternoon. Can you pick me up from the airport? Winnette, please, because I'll be flying in. Gregory, hi from Georgia. Welcome. Hey, Georgia's in the house today. Durham, North Carolina. We got the South in. The South. Lots of folks in the South. They wanted to hear what we had to say. Irvine, California. Marcus from Central Cali. Where's my overseas people? I always get somebody coming in from overseas. I get Charlotte, North Carolina. Here we go. Oh, here we go. Charles from South Africa. There it is. He wins the prize. High five. That is awesome, Charles from South Africa. Thank you. Curious, Charles from South Africa. What time is it in South Africa right now? I always want to know what time people are watching this thing from overseas. I've got Eric in Mobile, Alabama. I've got Ed in Lakeland, Florida. Welcome. And DJ in one of my favorite cities in the world, Charleston, South Carolina. Welcome, guys. I'm super pumped to have all you guys here today. Like I said, Mondays are the day. Mondays are the days that you guys want to come and join me. And sometimes my wife, Liz, even comes in and does a women's corner, a really great woman-focused conversation. Her and I come and are super grateful to be here with you guys on Mondays. That is our time on Bigger Pockets, Facebook and the YouTube channel. So mark your calendar. Look for announcements for me and my wife, Liz, coming out and doing lots of cool stuff for you guys. We've got lots of great stuff in the pipeline. So make sure you stay tuned to Bigger Pockets Facebook and YouTube page to come see me here because it's about live sessions. It's about me giving you the opportunity to pick people's brains. And today will be no different. Like I said, if you guys are watching and you guys have a full-time job, shout it out. Listen, shout it out, especially shout it out in the comment box. If you guys have, I want to hear from folks that have a full-time job and love what you do. You don't want to invest in real estate because you hate your job. That's an interesting conversation. I'm going to have that with our guests. But if you want to invest in real estate because you hate your job, that's one thing. But if you want to invest in real estate just because you want to diversify your wealth, you want to just get to your wealth goals a different way. And the Wall Street's fine, but that's not the only way you want to get there. Give me a quick shout out because today we're going to talk about folks that love what they do, but they also invest in real estate. And that's an interesting conversation. And we're going to talk today about how you guys can do it. I got two awesome guests that I'm going to bring in to talk to you guys today. Make sure you stay till the very end because I've got some big quick tip questions at the end of it. Now, what better organization for me to bring to talk to you guys today, but Bigger Pockets, right? Bigger Pockets is a phenomenal organization. We all love Bigger Pockets. We all love what the community that's created and what it's done for all of us and everything like that. So what better organization than employees that are working at BiggerPockets.com, right? So, by the way, those that are supporting me from behind the scenes, I know that there is a means that for people that want to be considered in working for a great organization like Bigger Pockets, I know there is a means to apply. If I'm Iron Man, she is Jervis, the little voice in his head that helps him and stops him from crashing and everything like that. That's my friend Nikki. Nikki, if you could please put the link up for the folks going to go to if they want to apply to BiggerPockets. There you go. BiggerPockets.com/careers. It's a great organization. It's a phenomenal headquarters. When I visited, they were putting expansions on the space for more desks, more awesome people to come and work for them and stuff like that. And I've got two folks that I want you guys to meet today. BiggerPockets was so kind because they know I don't have the best memory in the world. So what they decided to do is they decided to give me two people with the same first name. And I love that because it makes it easier on Matt, right? So the first person we got is Connor Anderson. Let's bring Connor Anderson in. Everybody give a big, lots of hearts to Connor Anderson from BiggerPockets.
Yeah.
Welcome, Connor. How are you today?
I'm doing well, Matt. How about yourself?
I'm doing great, man. Good to see you. I believe you and I have met face-to-face too. Yeah. Awesome to see you. And I've got lots of shout outs, man. I've got people that they're full-time looking to diversify. I've got full-time insurance agents, software writers. I've got a nurse, Marion. Thank you for your service, Marion, for being an essential worker and everything like that. Lots of folks on here that love what they do. I love being an instrument technician. Can you imagine that career, Connor, as an instrument technician that Patrick here has as a job?
I can't play an instrument, so I'm not sure how to be able to fix one.
Yeah, I know. Can you imagine? You probably have to learn how to play everything, right? Yeah. But also you have to need to fix it too, right? So at the end of the day, these folks love what they do. And I'm sure you work at one of the greatest organizations in the world. So you love what you do too, right?
Absolutely. Yeah. I wouldn't be doing it if I didn't love it.
Yeah. And these folks all watching here all love what they do, but they want to diversify their wealth in real estate, right? So that's the topic of today's conversation. Before we get there, tell everybody here what you do for the greatest organization in the world, BiggerPockets. What do you do for BP as a staffer there? A team member, let's call you.
Yep. So I am the advertising sales coordinator at BiggerPockets. What that means is I do all of the advertising for the podcast, the newsletter, ads on the site, ads at the conference. I work with all the hard money lenders on BiggerPockets.com, and I also put together a number of other strategic partnerships for BiggerPockets. So my day-to-day is just selling advertising to the companies that you guys are likely familiar with. Some names would be Fundrise, Cozy, Rent Ready, Memphis Properties, REI Nation, Ashcroft Capital, just to name a bunch of the people that you guys are.
I know those guys. Yeah. So what I want to point out is that if you guys like the relationships that BiggerPockets is able to present to you, and then I know that there's a lot of organizations. I'm not sure if you're putting this together as well, but let's say I have a BiggerPockets Pro membership. I get discounts and I get all kinds of really great members only access to those organizations, whether that's discount codes or BiggerPocket Pro member only access to those organizations. And I think it's one of the many, many things BiggerPockets has. It's a great benefit. I'm not sure if you were part of putting those together as well, or were you?
Yeah. Great. So you're talking about the Pro perks, and yeah, those are constantly things that we're looking to just provide as much value to our members as possible.
Cool. Well, thank you for doing that. Love what you do for BiggerPockets. And we're going to jump into talking about the tips that you and another Connor may have on investing full-time, investing while you're working full-time. Let's bring on Connor number 2 while and we can jump into the conversation. Welcome, Connor Center.
Hey,
what's up, man?
How are you going? Thanks for having me.
Thank you.
I'm well. Yeah.
Good. So tell us real quick, what do you do for BiggerPockets.com?
Yeah, I'm also on the sales and marketing end of things. I work with our premium members. So if you're an agent or a premium agent on the site, you've probably seen my name on emails or things like that. But yeah, I support our premium members and as well try to grow that membership from a sales point of view. So I want to make sure we have a good membership base, but also a good ecosystem where the people that are premium members are getting leads and increasing exposure. So that's what we're promising.
That's awesome. And I know BiggerPockets premium membership is something to consider if folks really want to take their game to the next level, not just like to put themselves out there as an active investor, to put themselves out there as a vendor that offers things, because real estate investors need a lot of things. We need stuff. We need machines. We're just cranking out. I need a CRM software. Or I need a realtor. Or I need I want to invest in something. Or I need a mortgage broker. Or whatever. The premium membership is a great way to make yourself noticed on BiggerPockets.com and in the BiggerPockets communities. And I know you've been an integral part in assembling a lot of that. So thank you for creating that phenomenal product for everybody.
Absolutely. Yeah. It's been an awesome, journey getting to know those people. And then outside of that, I also get to partner up with Connor. So as you know, he keeps me busy. So,
Dude, so let's bring on another Connor. You guys are both
Yeah.
Connor. I know y'all have some kind of a nickname or whatever it is at BiggerPockets, or do they just say Connor C or Connor A or whatever? What do they call you guys at BiggerPockets?
So I go by Connor Triple A Anderson. And there's a long story behind that,
Yep.
but yeah, just Triple A.
Yeah,
Connor
you go by
number one,
Triple A,
too.
like
Yeah,
the battery.
Connor number one.
And what do you go by a Connor Center?
I'm just Connor number 2. I'm irrelevant. Sometimes I might get the bigger Connor because I'm a taller guy, but that's all I got working, Matt. It's rough. I'm sorry.
Do they dare call you Little Connor, Connor Anderson?
They tried to do that at first, and I shut that down pretty quickly.
I hope you did. I hope
Yeah.
you did.
I'm
Yeah.
gonna bring that one back, though. I'm bringing that back.
Right, bring it back. You should. Yeah, big Connor, little Connor. Right, that's awful. I wouldn't. I would fight that too.
Yeah.
Good. Well, good stuff. I'm gonna just call you guys Center and Anderson. Okay, by your last names. They sound like baseball players. So we've got a lot of folks, and it's interesting. We have a lot of folks that are in the essential services on here. We've got paramedics. I've got Keith, who's a firefighter, on here. Thank you for your essential services, Keith. I've got Philly truck driver, man. And I've even got folks like my friend Joel here, Joel Robinson, who is not looking to diversify, wants to just leave his job. And I totally get that. And that could be a path too that folks could take here that we're going to talk about. But a lot of folks, and this maybe is including Joel, that want to, and by the way, let's start doing questions, guys. My audience, we got a huge amount of people watching. Just having some questions, and I'll sling it out to the Connors here, and we'll get into a real conversation about investing while you're holding down a full-time job, whether you want to exit that job at some point or not, or whether you do what you love, like being an instrument technician. And I love that. I love that job. In that. So, what are some thoughts that you guys have, or let's even go further. Connor Center, how did you get started investing in real estate, and what are you up to now? Like, what kind of deals that you've done?
Yeah, definitely. So I actually started with BiggerPockets about a year ago, around this time. And immediately, I was sitting right next to Connor Anderson, and if you're, Craig Kurloff, if anybody watching knows his name as well, the author of that house hacking book that we produced. So I had a lot of personalities around me that were taking steps to become financially independent. So right away, I looked in the mirror. I was like, what am I doing incorrectly? How can I improve? And then how can I actually start investing in real estate? So within 3 months, I was able to get my financial situation in a place where I could buy my first home using a FHA mortgage. So government-backed mortgage, low percent down. I got in and I eliminated a lot of my life expenses. And then from there, I was able to start building a base where a lot of people, I think, struggle getting to that base of financial just independence, not even freedom quite yet, but just understanding, hey, I have the ability to save. And then once we get to that point, that's when I was able to start looking at deals and actually have the time, right? Because, you're so worried about money all the time, but have the time to learn, hey, where can I start investing these assets? So I got the primary residence here in Denver, and then I'm actually under contract for a 4-unit right now. So 5 units, in roughly a year's time. And these are already all primary residences. So I'm not like leveraging crazy amounts of capital. I'm not Joe Flash by any means. I don't have all the money to do a lot of these crazy deals that you might hear about. So
yeah, I know Joe Flash, and you don't want to be.
You're Matt Flash. So
I'm Matt Flash. Yeah, right. I just talk fast. I don't run fast.
That's it.
So the you talked about your reached your base financial, right? So when you talk about that, what are some of the core financial things that you think that a new investor, if somebody's looking to get in or invest while they're working or whatever it is, what are some of the base financials that they need to be present to as they're starting to build that up? I mean, we're talking like credit score, cash in the bank, that kind of thing. What are some of the financial houses you got in order to create that base financial for yourself?
I think you just said it, like one word, just be financially present. I think a lot of people stay away from the things they're afraid of, right? Like, hey, I know I'm losing money. I know I'm not saving efficiently, so I'm just going to avoid it. I'm going to avoid looking at my bank account. I remember, things like that. So be present, understand where your bills are, and then start taking ownership over them and eliminating some of the things you don't have to necessarily have, and look where you can be more efficient. So yeah, it starts there. We're just keeping an eye on your checking and your savings account, developing good, saving habits. And then I think the next step would be credit score. And you can't, positively impact your credit score unless you have enough savings and you have enough, financial literacy to get the ball rolling on that. So I think it's like, a two-step process. And then before you know it, you'll have that time, you'll have that confidence to go on and start looking at homes. When previous to that, if you have a 550 credit score, you're going to be scared to death to look at Zillow because you're like,
I got you.
That's not me.
The first thing that I did when I did my first deal was a house hack, and I lived in a 3-bedroom, 1-bath, rented out 2 bedrooms to 2 buddies of mine, and my cost of living went to zero. I was actually making $60 a month. And the first thing I did, because I was working when I first started investing, I was just slinging my paycheck, towards bad debt. And in 2 years, I paid off like 30 grand of bad debt. I've like really, awful credit. I was a bad spender at the time. I had, high credit card debt and stuff like that, paid all that off and paid off all my student loans. So 30 grand in student loans and high credit cards in 2 years. And I just did it kind of nibbling at it and took what I would have paid towards my living expenses, which are around $1,000 a month, somewhere in there. And I paid it towards that bad debt. And I just nibbled at it. And in about 2 years, I was bad debt free, which is incredible place to get, right? Which is maybe something you're alluding to there, right?
Yeah. And it was more just bad spending habits too. And I think the confidence that you get once you tackle those things head on, when you paid off 15K of debt, the compounding factor starts getting, we're like, well, I could do 25K. I could do 30K. And
I started to play a game with it. I played a game with it. I was like, well, how much can I do? Like if I cut back this expense, maybe I could get up to $2,000 this month in my month in the payment on that bad debt. So awesome. Definitely. So thank you. What I heard, and then just to reiterate it to the audience here, if you guys are working full time and you want to start investing in real estate, you guys really need to work on getting your financial house in order. And that does not mean saving up millions of dollars. It means just getting your personal financial statement intact. It means just knowing your credit score and monitoring it. It means like maybe you don't need that Blue Apron subscription. Maybe you don't need, the whatever, the $5,000 vacation this year. Maybe you don't need the new car. Whatever it is, just being financially savvy. Okay, so turning it over to Connor Anderson, tell us real quick your backstory, what you're up to these days, and how you got started.
Totally. So when I was in college, I just one day all of a sudden had the idea pop in my head, like, I would like to be wealthy. And how do most people in America become wealthy? And based on like just common knowledge and also a little bit of Googling, I quickly realized that most people in America that are wealthy and financial independence do so through real estate. And that kind of just, got the snowball started at the top of the hill, and I slowly started rolling it down the hill to the point where, I was educating myself as much as possible, reading every single book I could, listening to every single podcast I could, moving to Denver from Michigan, where I networked with the right people at BiggerPockets and got myself a job at BiggerPockets. And then within, I want to say the first 6 months of BiggerPockets, bought a house hack similar to what Connor Center and you did, Matt, where I bought a 2-bed, 2.5-bath townhouse, added a 3rd bedroom, rented it out to additional roommates, cut my living expenses to zero, was able to save up a ton of money. And then about 14 months after the first house hack, bought another house hack that I'm currently living in, another single family property, 4 beds, 2 baths, where I'm renting out the additional bedroom. So I now have 2 rental properties that are, cash flowing. The mortgages are being paid down every single month. They're appreciating every single month. And my living expenses are to the point where I can live comfortably on a very reasonable salary. And then also, continue to save and invest and can grow that portfolio to whatever size I want to in the future. And I want to piggyback off of Connor Center.
Please.
What he was talking about earlier, the most important first step for people is getting their financial house in order. If you're the type of person that is mismanaging $1,000 a month, or just $1,000 in savings, you're going to mismanage $10,000 in savings. You're going to mismanage a property. So what you really need to do from an education standpoint is listen to all the resources that BiggerPockets have, but in a certain order. Listen to the BiggerPockets Money podcast first. That has helped me probably more than the real estate podcast has. once you get your financial house in order by listening to the Money Podcast, listen to the Real Estate Rookie Podcast so you can actually get started understanding real estate and how to invest. And then jump up to the Bigger Pockets Podcast. And from there, jump to the Bigger Pockets Business Podcast, where you can learn how to grow and scale that real estate business. So I really want to, I think listening to the Bigger Pockets Podcast is awesome. Reading all our books is awesome. But start at step one with getting your financial house in order, and then take the next steps after that.
Step one. That's great. Because I think that, and not that I want to make it all about step one, but a lot of people don't know what step one is, because there's a lot of steps you got to take. It's like, well, do I start up an LLC first? Or do I, do this? Or do I do that? Do I pick a market? Do I go and try and buy a 100-unit apartment building? People, it's not clear in real estate investing what the first step is. And so I love what both of you guys are saying about spending time getting your financial house in order. My wife and I, when we got started, spent a year getting educated.
Absolutely.
A year going to classes, reading a lot of books, getting together on the weekend and talking about what we had read and everything like that. It was great. We had a good time in that, and we had fun learning. We travel a little bit and everything like that while we were learning and all that. But we spent that year getting our heads right, and then we started investing. So lots of questions from the audience. I'm gonna start throwing some stuff in here on YouTube. I've got Jared Sutherland. He asked a little bit ago, but I'm going to pop you in here, Jared. What do you think the best strategy is for working full-time and being able to scale and acquire at a decent rate, 1 to 2 properties a year? Now, you guys have already talked about the fundamentals to get started, but if Jared's looking to acquire 1 to 2 deals a year, right? What are your thoughts? I'll go first to you, Anderson. What are your thoughts on what you would tell somebody like Jared here?
Yeah. So for me, I started with the house hack route, and doing that, I've been able to buy 1 to 2 properties for the past 2 years. I really like that strategy, since you can use a low down payment loan every single time you buy that property. So you're only putting 3 to 5% down, compared to buying rental properties. You have to put 20 to 25% down. If house hacking is not something that you're able to do, I would. And this is, a strategy that I'm going to start implementing here soon, since, I don't want to house hack forever. I want to, actually live in a single family place and not share it with other renters. But I would focus on buying, below market value, a deal that needs some rehabbing. So you have, your $30,000, $40,000, $50,000 that you need to purchase the property and then fix it up. But at the end of it, you can refinance that $30,000 to $50,000 or whatever it is, refinance that money out of the property. And then you still have all of this cash set aside that you can go and buy more properties with. And this, of course, is called the Burr Method. If you're putting down 20 to 30 or 20% every single time you buy a rental property, you're going to run out of cash really quickly, unless you have a ton of cash to work with. So, being able to pull out as much cash at the end of every single deal is what I'd be trying to do.
Good stuff. So, Connor Center, have you done a Burr deal, or is all your stuff, fairly good condition when you buy it?
All the stuff I've personally, even the 4-unit I'm under contract with right now, is all stuff that's relatively good shape. But just what Connor was talking to there, I'm starting to look for more Burr related deals, because once you take care of your house and you buy properties using an FHA or owner occupied conventional, you can start building wealth quickly. And then it's all right, what's that next step? So I think the next step for me would be Burr, but I'm still in the process, of accumulating enough capital or raising it for a deal like that.
Yeah. Okay. Good stuff. Because that's what my suggestion was going to be to Jared here, is that if you want to do that many deals, to avoid what Connor Anderson was talking about just simply just running out of capital, and most seasoned investors that have been doing this for a while, like myself, we always look to do the Burr deal. It's very hard to run a business in real estate if you're not creating value and then pulling some of that value back out, either through a sale or through a refinance. And that leads me to my next question here. I got a Philly trucker. That's just because you got to love YouTube, because people can call yourself whatever you want. I got Philly trucker here. What should I get? What should I What direction should I go to get financing for a flip property and a cash flow property while having a low credit score? Now, Connor Center, you talked about getting your financial house in order. So let's say someone's coming in who does not have their financial house in order, has a low credit score, but they want to get into the business. What would you say?
Yeah, I think it's not impossible, but it's definitely a lot harder. And, when you have a hurdle like a credit score, which is how lenders are going to really evaluate you, depending on how bad your credit score is, you need probably minimally 620 to 640 for, FHA backed, right? So just around there, and to get in owner occupied, you're already pretty limited. So then you'd have to probably start looking at raising money from other people. It's going to be really hard to gain the trust of other people if they know you're financially maybe a liability or not in great shape. So it all comes back to that, but there are options. You can look at hard money, even BiggerPockets. We have a resource for a hard money lender directory, and you can work with those people to, around some of the issues you might have financially.
I forgot I think it's just HLM, but Nikki, if you could put that up there, because I think that the folks would love to take a look at that. Now, understand, these are not organizations. These are just organizations that have registered with BiggerPockets as legitimate hard money lending companies. They're not. It's not like we're not playing favorites here. It's not like our list of favorites or companies that we've vetted and vouched for or anything like that. You still got to do your own homework. We're just giving you a yellow pages. Here's a phone book, and you can look in that phone book to find out who you want to do business with. That's great. And obviously my book, Raising Private Capital, that I wrote with you guys out there at BP, which just was a great experience writing a book with you guys, is a great way for somebody like Philly Trucker to look in your own network and find some alternative financing. Connor Anderson, I'm going to toss this one over to you. I'm not sure if, but I think you could tackle this one. And I'm going to shorthand it. This is from Curtis Bennett coming in on Facebook. Welcome, Curtis. Hey, Matt and Connors. Nice to Connors plural, right? Nice to meet you behind the scenes players. We've got a house, and this an enormous question that's just going to blank you guys out here, and I'll try and read it quick, and then we can make it go away. So bottom line is, there, look at that. I didn't know you could do that. I didn't make it smaller. Since they're trying to get this property sold, right? Bottom line, this is a flip that Curtis is trying to get sold here. I have a friend that's a property manager. Would you recommend taking a property that Curtis was trying to flip and turning it over into a rental? Right. That's something that happened a lot in 2008 when the market kind of went right. So we're looking at a potential recession, stagnation in the economy right now, maybe not as much velocity. What do you think, Connor Anderson, about taking a flip and making it a rental?
Yeah. So it really depends on the situation. If keeping it as a rental is going to keep you afloat, pay the monthly expenses on the property, and maybe provide a little bit of cash flow, I would definitely suggest doing that and holding on to it for as long as you can, and then selling it for a profit later on. The only thing with that, like when you sell it, you're going to have to pay taxes on it. So for him in a $95K market, my suggestion would hold on to it and try to run it out as long as possible. It's really hard to say with specific markets. That's the biggest thing that I don't know here, because me and my market of Grand Rapids, Michigan, the housing market's on fire. Days on market is below 30 days on market. Most nice properties are going for $10, $20, sometimes $30 or $40,000 over asking price.
Yep.
And they're moving quickly. So here we're not seeing a slowdown in the market, even with coronavirus and the economy the way it is. So it doesn't sound like that's the case for him. So I would suggest holding on to it and renting it for as long as it makes sense.
Here's what I would do, because I held a few flips that I had a bunch of. I've been investing since 2005, so I saw the last downturn, and it caught a lot of folks by surprise, kind of like this one's doing it, right? Nobody had global pandemic in their underwriting or anything like that, so we're kind of like having to play it by ear, right? And that so Curtis, what I would suggest you do, and I have a flip for sale right now, and I had overpriced it. I was a little greedy on the asking, and when COVID came along, let's drop the price. You know what? Let's just like drop it down, get it down to break even and get it sold. And so I think that you may want to consider the option of, okay, well, if I lease it, is it going to cash flow? Number one, if you're going to be underwater on renting it, sell it. Drop it to break even if you can. Likely is you're overpriced. I hate to say that. I'm saying that with love, but you're probably overpriced if it's not selling. Because I agree with Connor Anderson that this is properties that are vacant are getting scooped right up, because then you have to you can do social distance level showings. You can just go in and take a look. You have to deal with cleaning somebody else's stuff or whatever. So if you got a flip that's in good condition, it should have scooped off the market. And I had to learn that the hard way for a flip that I had, because I'd gotten too greedy and overpriced it. So I just dropped it, and it went under contract the week that I dropped the price. So I recommend that. Or if you can lease it and it will cash flow, it's impossible, but you also think long-term, like, okay, well, 5 years from now, am I going to want to deal with the management of this property? Is it part of my business plan to have this property? It might be better to just cut bait, move it on down the road. Because I think that we're going to be looking at a soft economy for the foreseeable future. So I don't think leasing it for a year is going to get you back to a point where you can sell it again. Yeah. I think you're either to cash flow it for the next 5 years, right? And if it's a loss, cut it, or just sell it and move on to the next one. What do you think, Connor Center? What would you do in this scenario?
Yeah, I mean, Matt, I'm always going to take your advice for these things.
Oh, you
have a lot more experience for it. But I agree with both of what you're saying. Me personally, my investing strategy is long term. I'm looking at 30 years out, like a mortgage. So if it's going to be a terrible loss for me personally, I would be like, oh, I need to cut bait with this. But if I could recoup my initial investment, and then over 30 years, you're probably going to get the property paid off and recoup much more than that. It might not be such a bad thing for you individually, depending on your strategy. If you're trying to accumulate wealth, for retirement, and you're like, I want 50K off this property, 100K off this property, you're going to be in a completely different situation where maybe you want to just cut bait with it, and then use that capital right now a little bit more efficiently. So,
I've had a tip from in my, hey, thanks guys. We've been weighing and dropping the price. We still have decent wiggle room in the profit. Our plan has been to flip us. I just get it. If to me, Curtis, I would just get it off the plate. Because I think that this frees up, getting this property under contract will free up the most valuable asset you have is your time, right? And to free up your time, you get whatever capital you got in it back out, and you can go and live to invest another day, as they say, right? So cool. Jumping on the next one. This is really for you, Connor Center, because you were our our base financial, get your financial house in order guy. I'm going to keep picking on you for that one. Yeah. So I got Marquette coming in from YouTube. Thank you for your question, Marquette. I just sold my house and paid off my student loans. I got 800,000 plus credit score, money saved up, just working as UPS driver, and I need to find contractors I trust. Okay. So Marquette has done a lot of what you're talking about, right? Paid off all the student loans, 800 plus credit score, money saved up, right? UPS driver. I mean, I love that, because you're just driving around, probably make a few phone calls and, do the hustle as on the side hustle as you need to, right? Now, how does Marquette, she's done a lot of what you talked about. The foundation is built. Now it's time to elevate. How did you tell me personal story? How did you land, or maybe you didn't need contractors because you were doing deals that were already stabilized. Any guidance on finding local contractors? Have you had to do it yourself, or any thoughts here? If not, I'm going to pick on Connor Anderson.
Yeah, I've had to deal with contractors, and it's funny when you have time, like maybe as a UPS driver, you have time to think about these things. Use that time for progress and strategize when other people are at a desk job or on the phone. Maybe they don't have that time to think. And I had that a lot just in sales roles previously. I was remote and I'd be driving around, so I used that time to build a strategy that worked for me. As for contractors, I actually kind of fell into a relationship because I was being aggressive with my financial freedom and real estate. So you kind of find what you're looking for. But yeah, I bought the half duplex, my first residence here, and my neighbor actually turned out to be a contractor who did gross $10 million in work. Sold granite out of his studio, really everything a contractor you'd want out of one. So I fell into that relationship. But I would say when you go to find one and maybe you're not really sure where to start, first start on BiggerPockets. And just start asking questions, because there's a ton of people that do just that there. And secondly, go to meetups, go to events. If you see a sign in front of the house that looks like a good remodel or flip, just call them up and say, hey, I'm an investor. Just build relationships at all corners. So
yeah, cool. Connor Anderson, what are your tips on finding contractors? And any tips? I'm sure you've had to work with a lot of them. How are you finding good reputable folks to do the work that you need to have done?
Yeah, so similar strategy to Connor, networking. So relying on my network of investors in the area and asking them, hey, who do you recommend for, X job? And then, call that person up, ask for some examples of flips or whatever that they've done. So like I can see, all right, they're good at tile. They're good at putting down flooring. Ask for examples of those projects. But another resource that I've used is on BiggerPockets. We have a relationship with Home Advisor, and Home Advisor does a lot of the legwork for finding contractors that are looking for work in your area, and had an awesome HVAC contractor that I found through there. So kind of similar to what Connor said, we're relying on my network, but also relying on BiggerPockets to help me find the people that I need.
Awesome. And here's one more tip that our mutual friend Jay Scott gave, I believe, in one of his books, and he's told me this, and I've tried it myself. And you guys that have day jobs, you can do this on your way to work, right? Mm-hmm. Stop by your local big box hardware store, your local Home Depot, your local Lowe's, right? Go roam around there first thing in the morning. If you got to be at work at 8:30, go to Home Depot at 7. Okay. The good contractors are there at 7 picking up their materials, right? The bad contractors don't go to Home Depot till 10, okay, or 11 or whatever. They have 3 cups of coffee, meander around the job site, and then go to Home Depot, right? The good ones are there first thing in the morning. You could just go in the parking lot and get some phone numbers off the trucks that are in the lot that are near your job. That's a good tip from Jay Scott. Change it up. I've got a different conversation from BK all day. Would you recommend, and I'll go to you first on this one, Connor Center. Would you recommend selling a property and paying it off and paying off another to be debt free? So you got 2 assets. One is a cash flowing asset. Another one's a cash flowing asset. Would you sell one of them to make it a profit to pay off the other cash flowing asset, which is sell an asset to be debt free?
And this is a pretty funny scenario because the contractor we were just talking about that I built a relationship with, I was having a beer with him sitting next door in the unit with him. We were talking about the situation, exact same situation BK all day is talking about. Yeah, great name, by the way.
Gotta love YouTube.
He has a few rentals in his situation, and he's like, oh, I just want to be debt free. So I'm thinking about just selling this one, and then I won't have a mortgage on my 2 others. And I'm like, well, interest rates are low. I mean, so, probably most likely you're going to be able to refinance and get a decent rate. And then all of a sudden you're cash flowing, that property's paying off itself. So I don't know. I'd really sit down and look at your situation because for me, again, I'm always partial to buy and hold. That's me particular, as an investor, that's what I'm going to do. And that's a conversation that I've kind of preached to other people as well. But obviously your strategy and Matt and Connor can probably allude to it is going to be a little bit different in every scenario.
I got a good one for Connor coming up next, for Connor Anderson coming up next. My answer to this is absolutely not. I wouldn't do that because you're creating a tax event. Like you're selling a property, which creates a tax event to create something to pay off a property. Money is so cheap right now. Debt is so cheap on properties. You're going to pay off that property and you're immediately like, man, I probably should just refinance it and go and, get some debt on it so I can take the money out and go do something else. Right. Unless that selling that property, paying that property off free and clear gets you across the finish line and it generates enough cash flow by itself that you hit a new lifestyle or a new goal set or whatever it is. There's no way I would do that because if property A and property B are paying their debts and producing a reasonable amount of cash flow, keep it going. As Connor Center just said, you're amortizing debt. You're paying it off over time. Let the tenants pay the mortgage. Don't create a cash event that's taxable to pay the mortgage off to pay off another one. No way. So anyway, Connor Anderson, I got one here for you. This is a curveball right down the center for you. Thomas Morgenthaler on YouTube wanted to know, how do you keep up with the mortgage payment if you only have to put 3.5% down? So what Thomas is alluding to is your monthly payment is probably much higher because you only laid a little bit down. You had to borrow a bunch of money. So what do you got here? How do you keep up with that?
Yeah. So honestly, if you do the math, the difference between putting 20% down and 3.5% down on a monthly payment is about $300 for a $200,000 property. So there's a $300 difference there in a monthly payment. That's not that much in the grand scheme of things, especially if you get other people living in the house for you, with you, renting from you. So when I put 3.5% down with my FHA loan for my first townhouse, I got 2 roommates in there. They were both paying $850 a month. My mortgage payment was $1,700 a month. So I was living for free. So I didn't have to worry about that monthly payment whatsoever. But to answer this is run your numbers when looking to offer 3.5% down. In some houses, if you put 3.5% down, you're not going to be able to cash flow while living in the property or when you move out and rent it. But other examples, like myself and Connor, and I'm sure you, Matt, and a dozen others, people are able to put 3.5% down and cash flow on properties.
Mm-hmm. Yeah. Oh, yeah. Well, I think that the bottom line here is and you nailed it in that, like, you've got folks that are helping you pay that payment, whether they're your tenants that live in your apartment, or if you buy on a 3.5% down purchase of a duplex, quadruplex, something like that. You've got tenants that are paying the payment. So, but my response to Thomas is, I think that you're looking at it, you got to look at it from a perspective of what is my global expense pool that I have? What's all the, real estate taxes and utilities and all that stuff that I have coming out, going out of the property? Then what's the debt service going to be at 3.5% down? And okay, well, is my rental income going to spread that in a reasonable fashion with some upside for myself and everything like that too? Don't worry about you having to write that check, because you don't. Your tenants are living in the property and helping you with it. And that. So that's my 2 cents there. So great answer. Anastasia, coming over on Facebook, wants to know, what do you recommend for investors located in Southern California where it's hard to save money? Now, Connor Anderson, or Connor Center, I'm going to ask you real quick. Do you invest in Denver where you live, or do you invest out of state?
I invest in Denver where I live, but primarily using the owner-occupied mortgage. So it's a little bit easier to do that, where it might be, as well using an owner-occupied mortgage in Southern California. Got it.
Well, I wanted to go. I knew Connor Anderson. You invest out of state in your home of Michigan, or your where you grew up. Let's say an area that you understand really well. So, what are your mechanisms or any advice you would want to give? I mean, obviously, Anastasia, is you don't invest in Southern California, and that there's maybe other markets you want to consider. But what are some tips you can give to Anastasia on perhaps finding markets and also just doing that remote hands-off management from across the country?
So for me, I actually did purchase my first place in Denver, and Denver's not a cheap place to live. And I had to save every single dollar I cut. I looked at every single expense that I had, and I was ruthless with what I cut out. I rented out my car to individuals that were looking to rent cars. I rode my bike to work. I spent probably $200 on groceries a month in total. I was a savage when it came to saving. So if you can do that, do that. If not, though, then it may make sense to start looking outside of your local market. So I saw a question similar to this posted on the BiggerPockets forums, and I answered it by quickly looking at areas that were 2 to 3 hours away from the city that they're looking in, and seeing if there's less expensive markets. So for this individual, if she's living in San Diego or LA, look at markets that are 2 to 3 hours outside of where you currently live. And I promise you that there's going to be less expensive markets where you can invest in real estate. And if you really need to, you can still drive that 2 to 3 hours to check out properties that you might want to make an offer on and buy, or if there's a maintenance issue, a tenant issue. If you really need to, you can drive that 2 to 3 hours quite easily to check in on the rental property. So first, start with just being ruthless with your savings. And if you can't do that, start looking outside of your market.
Absolutely. And then there's a guy, David Green, wrote a great book on the long distance real estate investor that Anastasia, you might want to check out as well. And great tips there, Connor. So guys, I want a few more questions. There's a ton of questions, but I've got, I'm going to put you guys on the spot on all these questions. So if you guys asked a question and we don't get to it today, I've got a big surprise for you. And I'm going to ask the two Connors here to do some work for us to help you guys out. They don't know about that yet, but I'm going to put them on the spot in a minute. I'm sure they'll say yes, because you seem like pretty good guys. Danny JC on YouTube wanted to know, and this is to both you guys, and just, I'm sure you maybe been here before, tips on getting over the analysis paralysis phase, right? I might tattoo, just do it on my forehead so I see it every day in the mirror. Maybe not that extreme, Danny, but hey, if it works for you, that's great. But what both Connors, Connor Center, I'll start with you. Danny here is stuck in paralysis by analysis. What would you tell him?
I mean, I think the tattoo is a very good option. But no, don't do that. I don't want to recommend that at all. No. But I think I talked earlier about like the compounding effect, and that's something that Craig and I think Connor Anderson might have actually shared with me when I started. If you start building confidence in your real estate knowledge, which you may already be there, and this might not be the best advice, but start building the knowledge you think that might be the roadblock to you going through on that deal. Like if you're looking at a deal and maybe it has a piece of fascia that's falling off the roof, or a piece of a roofing that there's an issue with, understand a roof or do some homework and be like, well, this is going to cost me $10,000 if it's a headache. So find out where your concerns are, maybe your anxiety with a particular deal, and then attack those knowledge-wise. And if you can't overcome them yourselves, maybe partner with a contractor or partner with somebody that can help you get over that hump. But generally speaking, I think if you attack the paralysis with knowledge building, it can really help you get to a place, where maybe you're a little bit more comfortable.
Mm-hmm. Got it. What do you think, Connor Anderson? What would you tell to our friend Danny, who seems to be stuck in paralysis by analysis? If you've ever been there, whatever advice you got, we got to get Danny moving. What do you think?
Yeah, so I got a two-part answer to this question. The first part is take the pressure off of yourself to find a home run deal on your first. Very few people's deals are home runs the first time around. My deal, it is not a home run. It works out well. I'm in, my property is in Denver. It doesn't cash flow great. It really just breaks even. But I learned so much from this first deal that I can take it moving forward, and I can take the lessons that I learned from this first deal. And I know my second, third, fourth, fifth, up to my 10th deal, whatever the number is going to be better because of this base hit that I hit on my first deal. So by relieving the pressure to find a perfect deal and just getting one done, you can kind of relieve that pressure and get over the analysis paralysis hump. And just you're going to learn so much moving forward that'll be worth not getting a home run deal. And the second thing I would say is set a deadline for yourself of when you want to actually buy your first property, and tell every single person that you know and every single person that we talk to, hey, I'm going to buy my first rental property by December of 2020. If you do that, people are going to ask you, hey, how's that rental property coming? Have you been looking at deals? Have you been making offers? Have you talked to an agent yet? Have you talked to a lender yet? That way, you're going to get the deal done because you're going to hold yourself accountable to that date, and other people are going to hold yourself accountable to that date. So you're going to force yourself into buying the property by that date. And again, hope it's going to be a base hit, and you're going to learn so much from it that it's going to be much better moving forward.
Yeah. Doubles and singles wins baseball games. Home runs are great for show, and the crowd loves home runs, but home runs don't win baseball games because most of the time you strike out when you try and hit a home run, right? Not to go all the way down the baseball hole there, but but it's true. It's true, and it works in business. It's true in real estate too. One last question I've got here, and there's tons of other questions, but I'll put you guys on the spot. What I'm going to ask for here is for those that did not get their questions answered, and there are folks that are that really need some support here. They need some advice. They want to hear more about how they can build their investing business while they're working full time. So I'm going to ask to Connor Center and Connor Anderson that you guys would be so kind as to go out to Facebook and go out to YouTube. And maybe you guys, maybe Connor Center, you take YouTube, Connor Anderson, you take Facebook, whatever, however it is you two want to divvy it up. And you guys would be willing to type in some answers and just some thoughts that can keep this conversation going for the BiggerPockets community. Would you guys be willing to do that?
Absolutely. Yeah.
Yeah, of course.
Okay, great, guys. So if you guys didn't get your question answered today, that's okay. If you didn't quite ask it yet, don't not ask that question. Type the question in, because the two Connors are going to jump in and they're going to give you guys their thoughts. Really, really generous of them to spend their time today helping you guys out, and really generous of BiggerPockets to let us borrow these two. One thing we didn't get into today, and I wanted to just highlight this last question. This is from Hardik coming in on YouTube. Would you please talk about turnkey investing? House hacking or Burr is not an option for me, right? And we've talked about house hacks. We've talked about Burr deals. But Hardik is talking about a turnkey. So for those of y'all that don't know that are watching, a turnkey is simply like a existing rental property that is that's already been fixed up. It's already been renovated. Now, turnkeys can tend to have a bad reputation, so you make sure you're using a good turnkey provider that's actually going to fix the property up and going to make that investment in the property. And you want to make sure you get it inspected and make sure that the renovation was done properly. But a turnkey is maybe priced a little bit higher than other deals may be, but it's supposed to be, and most of the time is, a truly hands-off investment, because a lot of the work and maintenance and whatnot's been done. So you're likely going to have less maintenance on the property. All the capital expenditures have been addressed and everything like that. Just more of a plug and just plug and play type of thing. Have either of you guys invested in turnkeys before?
No.
Nope.
Okay. Connor Center, the stuff that you're doing sounds similar to, although it's not buying it from somebody else. You're just buying reasonably good condition rentals, right? What are your thoughts on someone that's got a full-time day job investing in something that needs very little work, like a turnkey would be, over a Burr deal or a house hack or something like that? It seems like you focus your business in some ways in that angle. So what do you think the benefits are?
Yeah, I mean, when I first started investing in real estate, I thought turnkeys were going to be the way that I personally built wealth. I kind of similar to this comment here. I just shut off all strategies that didn't initially make sense. So I'm not sure if that's the case here, because if you can invest in a turnkey, that usually means in a well-priced market, like a very let's go Tennessee, we're looking at Memphis, any of those markets that have a ton of turnkey. You got to have the same amount of capital to do a house hack. So I would ask you just kind of go back to the drawing board and look at that. Maybe are you investing in the most efficient way? But I think there's plenty of opportunities out there. I mean, Roofstock is a partner of ours that I think has tremendous opportunities where you can get involved in, sometimes like $15,000 down and you can have that property. But if you're truly trying to be passive, like in the utmost way, I think turnkeys are a great option. Rent for Retirement's another one that I'm on their email list, and you're always getting this feed of opportunity. So yeah, definitely start looking if that's something you're considering.
Connor Anderson, thoughts on turnkeys versus Burr or house hacks? I know you've done a few of those. What are your thoughts on turnkeys versus the other strategies?
Yeah, I think turnkey can be a fantastic investing opportunity if that works for you. When I think of the perfect person that is, a good candidate for buying turnkey property, is likely someone who has a busy day job where they make, $100,000, $200,000, $300,000 a year, and they're looking to invest outside of the stock market. So they're looking to diversify their portfolio a little bit, but they don't have the time to buy rental property across town and manage, and they're just looking for ways to shelter some of their funds. And so an example like that is perfect for turnkey investing. And at BiggerPockets, we've partnered with a couple of awesome turnkey providers. Connor mentioned some of them, but REI Nation, they work with individuals like that every single day to help them diversify their portfolio overall and invest in real estate as hands-off as possible. And I know they do great work. Rent to Retirement is another example where they do great work and they help high net worth individuals diversify their portfolio with real estate, and Roofstock is another example. And truth be told, if really you're looking to invest passively in real estate and you think turnkey may make sense, I would also encourage you to consider investing in syndications. Again, you're passively investing in real estate and likely getting outsized return by working with an awesome syndicator. So really get to the core of why you want to invest in real estate, and then figure out the options that work best for you. If why you want to invest in real estate is just to diversify your portfolio, turnkey and syndication are both good options.
They really are. They're about as hands off as you get.
Yeah.
So just to bring it home, guys, two things. I had asked you before the interview. I had asked you guys for give me one key to success for investing while you're holding down a full-time job that you love, that you don't want to leave. You want to keep the full-time job going, and that. So if you can, guys, give us obviously how folks get a hold of you, because I'm sure you guys wouldn't mind if the BiggerPockets community here wanted to come pick your brain or say hello or say thank you, whatever it may be. So Connor Center, I'll take you first. How do folks get a hold of you? And what would you say was the tip that we talked about before the interview about your key to success you would say to someone who's looking to invest while working full time?
Yeah, I mean, we talked about a lot of things, but the number one thing for me is boiling it down and understanding your financial situation, being financially present. Is the biggest thing. And then take the things that you do really well at your day job. For me, I have to look at numbers and deal with sales. So I'm talking to a lot of different people. Take those skills and apply them to your real estate investing strategy and how you approach that. And I think you're going to see a lot of success. And then Connor Anderson just said, hey, understand why you're doing it. Because if you don't understand why you're doing it, the likelihood of you following through on it is probably slim. So.
Got it. Great answer. Thank you. Really got to consider what skills you guys bring to the table, skills in your current day job, and how can you bring those skills into your real estate investing business. Now, Connor Center, I'm not letting you off the hook. How do folks get a hold of you? They want to pick your brain.
Oh, yeah.
Want to hear? I know he dodged that. You noticed that, Connor Anderson? He didn't mention that. Yeah, right. He's like, I don't send me emails. No, they want to send you love, man. How do folks get a hold of you if they want to send you some love or shout outs or say hi?
Yeah, you can find me on BiggerPockets. Obviously, I have a profile there, and you can direct message me or whatever you'd like. If you can find me on social media, go ahead, add me, and we can conversate that way. If not, just Connor Center, just right below there, no period, no spaces or anything, at BiggerPockets.com. And always happy to have a conversation there as well. And we can always set up a phone call or whatever it is.
Great. Awesome. Thank you. Connor Anderson, what is your one key to success that you want to leave with everybody here, and how do folks get a hold of you?
Yeah, so my one key to success is setting goals and deadlines for yourself, and then communicating those goals and deadlines with others around you. That way that you're doing your best to keep yourself accountable, but you have others in your core group keeping yourself accountable as well. So a great way of doing that is by having a mastermind group. I'm in 2 mastermind groups. We meet every single week, and we discuss our goals, and we discuss how we're making progress towards those goals, and they really keep me accountable for that. So just really being clear with what your goals are, setting a deadline, and having others keep you accountable to those goals.
I love that.
Yeah. And then if you guys want to reach out to me, find me on BiggerPockets. My email is connor@biggerpockets.com. And then my Instagram is Connor T. Anderson. If you guys want to reach out to me on there, I'd be happy to discuss and answer any questions that you have.
Awesome. Thank you. As I said, guys, the Connors are going to jump onto Facebook, jump onto YouTube, and answer some of your questions and get you guys, get your information appetites fed. And they will take care of you guys, answer some questions that we weren't able to get to on today's show. I sure appreciate you two Connors for being here. Connor Center, Connor Anderson. I look forward to seeing you guys at the 2021 BiggerPockets conference. If they let you guys out of Denver up there to come hang out in New Orleans, I sure like to see you. I can't wait. That is my birthday weekend. And so I cannot wait for, I know. No trouble will happen there. Looking forward to seeing you guys, hopefully face-to-face, either out in Denver when I come out and visit again, or in New Orleans. Thank you for being here. Thank you, audience, for your questions. We had a phenomenal turnout today. I cannot believe how many folks were watching today. Lots and lots of questions. I apologize we couldn't get to all of them today, but I promise you that the Connors have your back. They're going to jump in and get those questions answered for you guys. So I sure appreciate everyone's time today. And thank you to BiggerPockets for creating the space for us to have these communities for y'all to come on and pick people's brains on a weekly basis. Thank you for watching, and I'll see you guys soon.
Thank you, guys. Thank you, Matt.